The market is already ready to take in all of the dovishness from the Fed chair in today's testimony after worrying for a moment about rising inflation, which might not end up being transitory. But in the end, if the Fed says it's transitory, it's good enough for investors. And that's what we're seeing in the price action on Wednesday. Stocks have recovered and the US dollar has come under some pressure. We continue to warn against expectations that the Fed will be able to hold with this inflation is transitory line, and we anticipate seeing a slow backing away from this narrative that ultimately proves disruptive for risk assets. U.S. producer prices came in hot just now, and at some point, Fed officials will need to concede they may have gotten this one wrong. We're already seeing adjustments from other central banks, with the RBNZ out earlier and talking about a least regrets policy approach that now pointed to leaning more towards the restrictive side of policy. But again, for now at least, investors are still trying to buy into Fed reassurances that inflation is transitory and still trying to feel good about extending record gains in U.S. equities. Earlier today, UK inflation reads came in hot and helped to fuel additional demand for the pound. On the COVID front, Indonesia reported another record amount of daily cases, while the EU said that the UK would not be added to the list of green countries able to travel freely into the bloc. Looking ahead, it's going to be all about digesting that Fed chair's testimony and the Bank of Canada policy decision. We also get the Fed beige book late in the day. That's all for now.